looking at the risk appetite overall, I mean, you know, PIMCO's total return fund is attracting about $1 billion a week. So looking at what that tells you, Bill, about the risk appetite of people around the world, when the world's largest fixed income fund is attracting that kind of capital at that rate, what does that signify to you?
Well, it signifies uncertainty, certainly. And that's, I suppose, what Ben Bernanke was speaking to when he spoke about unusually uncertain in terms of the economic environment. I think investors are as well. In addition, there's a demographic thrust that I talked about in my investment outlook, in which the boomers in the United States and elsewhere are getting older day by day. And to the extent that they are, fixed income becomes more of an acceptable place on the menu as opposed to previously.
What are you buying with the $1 trillion or so that you and PIMCO oversee? I mean, you talk openly about buying up U.S. Treasuries right now, not a huge yield, but yet this flight to safety. What else are you buying?
Right, we're buying lots of bonds, not just treasuries. I mean, treasuries are about 40 to 45% of the portfolio, and the portfolio itself yields about 4.5%. So that means there must be other riskier types of assets in the portfolio. Brazil is one, as you've mentioned. Those particular bonds yield 9 to 10% and very high. 5 to 6% in real terms after inflation is subtracted. Mm-hmm. In addition, there are corporate bonds, a selected assortment of high-yield bonds that produce 5 to 6% types of returns. We're looking at GMAC, now called Ally Bank.
Right.
We're looking at Ford Motor Credit. We're looking at those types of assets that are misrated, in our opinion, by the rating services at B or B+, and are really BAA type of assets because the government, in the case of GMAC or Ally, actually owns the company.
Right. Where can the average person put their money to work right now, Bill, if they don't have the funds to go through PIMCO?
Oh, I think an investor should look for stable and secure income wherever it comes from. And it doesn't have to come from the bond market. It can come from stocks. I mean, personally, I've been buying stocks in the high-quality category and stocks that yield 4 to 5 to 6%. We're talking about energy utilities. We're talking about drug companies like Merck, for instance, and GlaxoSmithKline. We're talking about, even a company such as General Electric, which is in the 3.5 to 4% yielding camp. So safe, stable income going forward is what is required from the individual investor, or for the individual investor.
Good insight, Bill. We appreciate it. Thank you.